Welcome back. Meanwhile, crypto exchange Crypto.com filing a lawsuit against the Securities and Exchange Commission yesterday in a bid to fight back against SEC Chairman Gary Gensler's ongoing crypto crackdown. The crypto trading platform filing the suit after receiving a Wells notice from the agency indicating its intent to sue the platform for operating as an unregistered broker-dealer and securities clearing agency because of the tokens traded on its platform that the SEC considers securities. But Crypto.com is accusing the SEC of overstepping its jurisdiction by regulating the crypto industry. Joining me right now is SEC Commissioner Mark Uyeda. Mark, it's great to have you this morning. Thanks for being here.
Well, it's great to be here.
What is the SEC doing regarding crypto?
Well, I think our policies and our approach for the last several years have been just really a disaster for the whole industry. We have been setting this policy through enforcement. We've done nothing to provide guidance on it. And as a result, this is being shaped by the courts. And different courts have ruled different ways. I think what this Wells notice is, and while I won't comment on the specifics of this litigation, the Wells, what has gone on is part of a broader frustration with the fact that we have not provided interpretive guidance as to what you can and cannot do. And if you are involved in some sort of securities offering, how you register, how you get regulated as a broker-dealer, how you get registered as an exchange.
And you say, moving forward, that the SEC needs to return to rationality by ending this war on crypto and ceasing empowering special interest ESG activists. I want to ask you about that because these ESG activists have been bullying companies to ensure that they've got all this ESG and DEI. And, you know, now you're seeing corporate America fight back because it's not just burdensome in terms of the red tape, but it's expensive.
It is about micromanaging a lot of what corporations are doing on things that have absolutely no financial purpose. To the extent that climate change, and I recognize what's going on right now, we have various hurricanes in Florida are going to have a material financial impact on companies. Guess what? Our rules already require them to discuss the impacts of that because it is financially material. So a lot of these rules that we're seeing are all about non-material, things that are not going to change the bottom line, things that won't affect how someone values the enterprise. And instead, it seems more dressed up, hey, we can obtain some social change because we can't get it through the Congress and legislation. Why don't we do it through the so-called independent financial regulators?
That is so wrong. And as a money manager, you're feeling it as well, Adam. So I want you to jump in here because this started as soon as Joe Biden took office and Gary Gensler took the helm at the Securities and Exchange Commission. All of a sudden, these new rules and regulations about quantifying your emissions risk and quantifying your customers' emissions risk and all this stuff around the climate change agenda, it's been a failure.
Made up regulations.
Thank you.
Government getting in the way. And I'm stunned and thrilled, Mark, to hear you say this, an SEC commissioner. Do you feel within the organization that there has actually been overreach?
Well, I should say I'm one of 5 commissioners, so I only get 1 vote, and oftentimes I find myself outvoted on these issues with my colleagues. I think within the agency, our agenda is directed by the chairman, Gary Gensler, and so the staff all follows his lead. The joke we have is we have about 5,000 employees at the SEC. He controls 4,995. I control 5.
Wow. Right. So is that, what's his motivation? Is this all political, or does he actually understand the crypto landscape? Does he actually understand the impact that these regulations around climate change agenda is having?
Well, I won't speak for what Gary thinks as his personal motivations are. He certainly has a perspective. The way I look at it, I've been with the agency for 18 years, done a lot of things involving regulation of securities, and the approach we're taking seems to be the wrong one.
Mm-hmm. What would you like to see different?
Well, I would like to see us, for one, we need to lay out some clear guidance and interpretations on what exactly falls within and falls outside of the securities laws. You can't even start to have the discussion unless you know what's in and what's out. And then from there, to the extent they are within our realm, we need to think about, all right, how does the broker handle these securities? And
that's the same thing as it relates to ESG, right?
Well, that's right. ESG, it's on our agenda. We've had a number of folks who've been pressing for that. But really, what is the risk that investors want? When I talk to companies and their investment relations departments, they say, we don't hear a lot of inquiries from the analysts who follow us about ESG. Maybe they'll get one question here or there, but it's all about financial performance. What's your revenues like? What are your expected earnings? What do you expect your growth opportunities?
Isn't that he's speaking your language?
Oh my God! God bless you, Mark. I mean, do you remember, Maria? A couple of years ago, there was this great debate about, what's the role of a corporation, and everyone was saying, well, we need to do good in the world. No, the role of a corporation is to make money and to serve your shareholders. And what I'm hearing you say, Mark, is that maybe it's time for a government to actually get back to letting companies do what they do. And that you as a regulator can create guardrails, but by the same token, get out of the way. Don't put up roadblocks, just put up guardrails. Is that fair?
No, that's right. We're supposed to be merit neutral.
Right.
You want to offer, for instance, the B Corps and say, we are not going to put shareholders first and said we're going to do good. You can do that.
Yeah.
You just have to disclose that. But we do not put our thumb on the scale of this type of corporate behavior is what they should be doing. What we're about is there fair and accurate disclosure,
Wow.
and then let investors make the decision as to whether to put their money at risk.
When you say we, you mean 5 of you? Because
Right.
the other 4,000 plus are actually enforcing what Gary Gensler is telling them to do. Look, Politico is reporting that Robinhood's chief legal officer, Dan Gallagher, is emerging as a leading contender to head the Securities and Exchange Commission if former President Donald Trump is reelected. Gallagher is also a former SEC commissioner. What would that mean for the agency? And I know this is totally hypothetical. We're all waiting on this election now, 28 days away. But do you believe that a Dan Gallagher or someone like that would change the direction?
Well, you're right. It'll be dependent on the election, dependent on the president's choice to select who is the chairman. I've been fortunate to know Dan for nearly 20 years. He certainly has a lot of experience in this area as a former commissioner. And now what he's been doing at Robinhood, he knows firsthand exactly the challenges of someone who's trying to operate within our rules and what happens when it's really unclear where the lines are on those rules. He testified a couple of weeks in Congress. I think he did a really good job of explaining just how frustrating it has been to deal with the SEC for the past several years.
And, this has real impact in terms of the broader macro story as well. I mean, if you don't have clear rules of the road, what do? You pull in, you don't spend, you don't invest, and you don't grow. And so it all is connected. And at the end of the day, this kind of bottleneck at the SEC is probably impacting economic growth.
No, that's right. It certainly impacts innovation. And I would say between the SEC and to a lesser extent, or to an equal extent, over what's going on at the FTC and the Department of Justice on antitrust, if you are a venture capital investor, why would you put your money into a new startup with a new idea, a bright innovation with a lot of growth potential if you cannot sell out to a bigger company?
Right.
You want to have that liquidity event at some point down the road. And we at the SEC, unfortunately, have made it more and more difficult to make the IPO route a viable one. You really have to have scale to go public these days.
That's another really important point. I mean, the IPO, what does this mean for future listings? Mark, it's been great having you. Commissioner, thank you very much for sharing your insights on this. Mark Uyeda joining us this morning, SEC